On December 13th, the Feds have decided to not to raise the rates, but that was one part. And the most important part was the press conference of the Federal Reserve Chairman, who went absolutely dovish. In the previous press conference on November 1st, he was dovish, but he was not as much open as he was on December 13th. And because of those kinds of dovish comments and the behavior of the Federal Reserve Chairman, we have seen very heavy upward movement in the entire US stock market and also in the global stock market. However, on December 14th and 15th, we have seen some reluctance in the European stock market and also in some Asian stock markets. Now, dovish is one part. The second part or the other part is the saturation. The entire US stock market, the S&P 500, Dow Jones, Nasdaq, all of the indices were already saturated and the Dow Jones was heavily saturated. However, in the previous week there was more bullish movement or absolutely heavy bullish movement. Now this heavy bullish movement has increased the saturation. Now this saturation is something that we have not seen in last 5, 6 or 7 years. Okay, so that kind of saturation is there in the US stock market as of now. Now on the one side, the stock market is dovish, is bullish, absolutely bullish, and at the same time it is also saturated. So this combination doesn't work, and this combination has never worked. For some time it might look okay that it is working, but otherwise we will see that only when the saturation is out of the picture, then there will be the continuation of the bullish trend. And if you notice, in my previous S&P 500 weekly technical analysis, I mentioned that there was a second weekly candle and that was on the heavily saturated levels. Now the behavior of the market, because of these dovish, saturation, comments and positive negative news, now the behavior has changed. So I will discuss in detail about the behavior of the stock market in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. We can say that whatever the problem is about to come or is about to be seen in the US stock market will be through the weekly charts of the S&P 500, Dow Jones and the Nasdaq. Now the second point of the agenda is the FOMC, okay, the projections, FOMC projections, the Fed chairman, okay, why he was dovish and why he has supported openly the stock market, okay, this thing, bond yields, 10 year, 2 years, 1 year, and the gold, okay. So I will also show you the charts of these bond yields and the gold, okay, and I will discuss a little about the gold, okay, what is going to happen to this the gold. After the projections of the FOMC, okay, now the recession is much more clear. The third point of the agenda is the S&P 500 technical analysis on the daily chart. Daily chart, okay, it is also this heavy, okay, the S&P 500 is heavy and also the Dow Jones. But on the daily chart, there is one more important thing, okay, that Monday will kind of, it will clear whether for the rest of the days the S&P 500 will move up or it is going to come down. Okay, so a special closing on Monday. I will discuss that closing later, okay, in the video. So that closing will define whether there is a probability for more upward movement or it is simply going to come down. The fourth and the last point of the agenda is the probable movement of the S&P 500 from December 18th to December 22nd. Whatever is going to happen in the S&P 500 and also in the entire US stock market, I will discuss in this the last point of the agenda. So guys, I'm going to begin with the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now guys, I'm going to discuss the first point of the agenda here, and in this the first point of the agenda, okay, I will talk about the weekly chart of the S&P 500. This is the weekly chart, okay. So weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. Now at first the candle itself, if you look into this the candle, it's a heavy bullish candle. However, the closing of the candle was not at the high, absolute high, okay, or not around the high. This means that there were bullish sentiments at the time of closing and this may result in a gap up open or a bullish movement. However, this is not confirmed. Okay, or this is not 100% confirmed, so there may or may not be, okay, a bullish movement. However, when we look into the Dow Jones, okay, so this is the Dow Jones. Now when you see the weekly chart of the Dow Jones, then you will notice that again back to back very extremely heavy bullish candles, green, green and green. Okay, and the closing of the candle was almost approximately equal to the high of the candle. Okay, so this means that yes, through the Dow Jones we can say that there are chances that we can see a gap up open, okay, or an upward movement initially upon open or after open on Monday. Okay, now this is not 100% confirmed. Okay, now why this is not 100% confirmed? Okay, otherwise in these kind of cases, okay, we would have simply said that yes, okay, it is 100% confirmed. In this case it is not 100% confirmed because as of now the saturation is extremely heavy, extremely heavy. Okay, not just heavy but extremely heavy. Okay, so now this saturation generally, okay, whenever this kind of saturation is seen, then we can see a sudden reversal. Okay, a sudden reversal. That is why, okay, I'm not saying that there is 100% confirmation we will see a gap up open or an upward movement, but there are good chances that this may happen. Now when we look into the technicals are good. Okay, technicals are good, and technicals are absolute bullish. Okay, and also saturated. Okay, also saturated, but this saturation, okay, so there is this is the saturation in the S&P 500 on the weekly chart. Okay, but this saturation is not heavy. I repeat, this saturation on the weekly chart is not heavy. It is saturated, yes, it is saturated. Okay, but it is not heavy. Then what's the problem? The problem is with the Dow Jones, because the kind of saturation we are seeing in the Dow Jones. Okay, so let me show you, okay, why I'm talking about the Dow Jones again and again. Okay, 2017 or 18, and before that, okay, 2013 was there. Okay, so just means only a few instances we can say. So that is the problem. That is why I'm discussing, okay, or I'm showing you the chart of the Dow Jones, that this kind of saturation is there. Okay, now any more addition, just like the previous week, okay, any more addition, okay, will make it more or heavily saturated. Okay, then we will talk about like maybe 2013 or 2014 maybe. Okay, that time we have seen this kind of saturation, that there is saturation and still the market is holding. It is holding and it is not giving up. Okay, that kind of saturation. Okay, so yes, it is very much clear that the S&P 500 on the weekly chart is 100% bullish, absolute bullish. Okay, but at the same time it is saturated, and it is more saturated because, or it is heavily saturated because of the Dow Jones. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And in this, the second point of the agenda, I am going to talk about the FOMC decision, projections or the SEPs, okay, and the comments of the Federal Reserve Chairman, okay, including the recession point, okay, and the other points, and the bond yields and the gold. So let me start with the FOMC. Okay, this is the Federal Reserve website. Okay, this is the Federal Open Market Committee meeting calendars statements. Now December, okay, the month of December statement. Okay, as such there was nothing much changed in the statement. Okay, okay, we are more focused on the projections. So let me give you the summary, okay, of everything, okay, that is mentioned, okay, here. So the summary was, this was to my Patreon community members. Okay, GDP. The projections indicates that the GDP will start to slow down and will decrease by almost 40% in 2024, and then will start to increase slowly in 2025 and beyond, but it will take 3 to 4 years to come back to the levels of 2023. Okay, so now you can see here, okay, that 2.6% GDP growth in 2023, and in 2026 1.9%. Okay, so this means that it will take like 3-4 years, 2027, when we can see, okay, the GDP growth as it is there, okay, in 2023, okay, at present. right? So it will take 3 to 4 years, okay, for the economy to be back, okay, to these the levels. This indicates that the economy is heading to the recession, as everyone is talking about. Even the top bank CEOs, JP Morgan, Goldman Sachs, okay, Citigroup, okay, they have recently confirmed, okay, the recession will be there. And if somehow there comes no recession, then the economy will enter into correction, a long term correction, okay. This will be there for 1 year, okay. Unemployment rate. So now the unemployment rate. So the projections indicate that the unemployment rate will increase and will remain like that, okay, on these the increased levels, okay, up to 2026, means a period of below trend growth, okay, which is seen, okay, as a recession. Now core PC inflation will come down from 3.2% to 2.4% in 2024, and if you see the core PC inflation in 2026, it will be back to 2%. So the Federal Reserve Chairman and the Feds, they have repeatedly mentioned that they are looking for the 2%. 2% target is expected to be achieved in 2026. The federal fund rate will remain, okay, 5.4% or 5.33% in actual, okay, in this year, and will be 4.6% or 4.64% approximately, okay, but the numbers are there in the round figure, indicating that there will be maximum 3 to 4 rate cuts, okay. However, maximum number of FOMC members, they are in favor of 2 to 3 rate cuts, okay. This means that we are anticipating that there will be 3 rate cuts, 3, not 2, not 4, but 3 rate cuts, okay, in the year 2024. And this exercise can begin as early as June 2024. Market is anticipating rate cuts from March, and market is anticipating 6 or 7 rate cuts. And now comes the Federal Reserve Chairman himself, okay, what he said and why he has said, okay, these kind of things that were very much dovish. So important comments were that tight policy is putting downward pressure. Okay, his body language was dovish. Okay, and yes, 90% there will not be any more rate hikes. 10% there may be. First time he has mentioned the word recession. Generally, okay, he has always avoided, okay, this particular word recession. Okay, and then dovish. Feds are looking for the soft landing, not recession, not something like 2008. Rather, they are looking for a back-to-back small corrections or recession, small recessions, okay, or simple corrections, okay, back to back for 2 3 years. And again, he's not answering the question regarding rate cuts, okay, and now he has changed his tone. So after mentioning recession, now he is saying that slowing down or the economy next year might be seen as normalizing, okay, not recession but normalizing, okay. In his terms, normalizing means either recession or correction. Okay, so so these were the comments of the Federal Reserve Chairman. So now you have seen that what was the picture, okay, through the SEPs or the projections. Now let's talk about the technicals, the bond yield and the gold. Now this is what this is, the 10-year bond yield, okay. And there was one more important part here. If you notice that I have mentioned this to my Patreon community members, that see, there came a sudden and heavy demand of bonds and gold after the Fed's decision, okay. So why this the heavy demand, okay. So you need to understand that bond yield, a decline in the bond yield means that the demand of bonds are increasing, okay. Rise in the bond yield means that the demand of bonds are decreasing, or the demand of the bond is decreasing, okay. So now this is very much important, because the bond yield, okay, you can see on a continuous, on a constant decline, bearish, and we have seen, okay, this particularly from the end of October, we have seen a very heavy rally in the entire stock market, and at the same time we have seen, okay, a constant decline in the the bond yield. On the one hand, okay, they were giving this the bullish push, extremely heavy bullish push against everything to the stock market, and on the other hand they were also looking for the safe haven. What are the safe havens? The safe haven is the bonds, okay, and the gold, okay. So we have seen that they were buying bonds, a lot of buying of bonds, and that has resulted in the decline in the bond yields. Now this particular thing, okay, this is more important, because when you look into, okay, or if you have watched my previous S&P 500 technical analysis, I think 2 or 3 weeks back. Okay, then I've shown you, okay, the relation between the bond yields, okay, and the kind of situation we have seen, okay, back in 2008, okay, recession. This was not clear through the 10 years, it was clear through the 2-year bond yield and the 1-year bond yield. Okay, we have seen. So whatever was there, okay, back in 2007 2008, okay, we have seen the same thing, okay, here also. Okay, but this thing is more clear in 2 year and 1 year. Before that it was the 2000 the bubble burst. Okay, so in those kind of situation we have seen, okay, this kind of movement in the bonds, the demand, okay, the demand and the supply of the bonds. Okay, so this was 2008 2007 2008 sudden, okay, this, then the demand of bonds, and then decline, okay, for 2 years, and this has resulted, okay, in the recession. Okay, so anyways, this is okay, so this is one part, that okay, that the bond yield is declining, or the demands or the demand of bonds is increasing. Okay, now let me show you the chart of gold. Okay, gold means physical gold. Okay, so whenever they hedge, okay, or anyone when they go for the hedging, then they use the gold. And I think a few years back, okay, there was a hedge fund, they have bought the physical gold worth $400 million. Okay, so this was the physical gold for $400 million. Okay, and this gold was then put in the Bank of England, okay, or in one of their treasuries. This, okay, this much of gold, the physical gold. Okay, now this is the chart of gold. Okay, gold. So gold is always, okay, historically, okay, everyone has used, okay, even the thousands of years, okay, for thousands of years, okay, gold was always used for the hedging, okay, particularly for the bad times. Okay, bad times means, look into this candle. We have seen that within one day we have seen a very heavy spike in gold. Okay, this means that someone has bought a lot of physical gold. Okay, this is all what this all is the preparation for the worst time, and the worst time that is about to come. So earlier the Federal Reserve chairman, he used to avoid speaking, okay, or saying this the word, okay, recession. Okay, but now, okay, this was the first time he has openly talked about the recession. And before him, the 10 CEOs, the 10 top US banks, JP Morgan, Goldman Sachs, okay, Morgan Stanley, Bank of America, Citibank, okay, their CEOs have confirmed that 2024 a recession is means it is confirmed. Okay, because banks are seeing the stress. There is a stress in the banking system. People, they have started to default on their loans, credit cards, okay, many of these are things. Okay, this means that now these are big ones, they are preparing for the recession, okay, that is there in 2024. Okay, or this is a long term, okay, downward movement, okay, in the economy, and this the stock market. But guys, you must understand that recession is the best time to make money, a lot of money, because what happens during the recession is that in the normal time we see, okay, these are green candles, normal green candles. But whenever there comes a recession, then we see heavy red candles, heavy red candles, and heavy red candle, and this the heavy red candle, okay, these gives, okay, a lot of money, right? So recession is the best time. And again, okay, you can use the technicals, the levels, okay, and these things. And if you need the knowledge about the technicals, okay, or the hacks, the strategies, the trend manipulation, predictions, support and resistance levels, then you can participate in my stock market knowledge transfer program. Okay, I've given the link in the description of the video and also in the comment section. And through this program I teach in detail each and everything. Okay, these are modified technical indicators, option strategies, okay, the support and resistance levels, okay, price prediction, the movement, the movement predictions, and everything, okay, that is there. So this is my email address. Okay, and also I've given the link in the description of the video and also in the comment section. Whenever you want to participate, okay, you can simply drop me an email. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these are daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day, okay, not 1 hour, okay, or 1 week or 1 minute. One candle means one day. Now at first, if you notice, this is the last candle. It's a very thin or a very limited candle, very small candle. And this candle was supposed to be like this. Okay, so in my pre-market update to my Patreon community members, okay, on Friday, the $5 trillion worth of options contracts, okay, they were about to expire. Okay, so $5 trillion, $5 trillion, okay, worth these options, okay, they were about to expire. This means that as of now, okay, bullish movement, okay, it is less likely, very, okay, there are very limited or thin chances that the bullish movement may happen. So there were only two movements, okay, either it will remain sideways, up down, or it will come down. So these were the only two options, okay, there, okay, on Friday. Now this is the other option, this is the coming down heavily, okay. This was not in the picture as such. Why? The reason was because of the extremely heavy bullish sentiments. Overall, a bullish movement was not there, and at the same time the bearish movement chances were less. Okay, bearish movement was expected but limited, okay, not heavy. Okay, this means that we were anticipating that for the entire day it will keep on trading between these two levels, and in between these two levels there are two sub levels, small levels. Okay, if it gives up this level, then it will be coming down to this level. Okay, if it is able to breach this level, then it will be able to move further up. Okay, and what we have seen, very limited movement in between these two levels only. So in my first update, second update, final update, I've repeatedly mentioned that the S&P 500 to my Patreon community members, that the S&P 500 will keep on trading between these two levels. This is the Dow Jones. So when we look into this, the Dow Jones, then we can clearly see that Dow Jones, okay, it was kind of holding, and as well as it was trying to move up. Okay, although the upward movement was limited, but at the same time the downward movement was also limited. Okay, so now what we have seen or what we can say through this the candle is that the candle is still supporting the bullish movement. Okay, the candle is not confirming the continuation of the bullish movement or so. That's a different thing. Okay, it may or may not happen, but the candle is simply supporting the bullish movement. Okay, now let's talk about some of the technical indicators. Okay, technical indicators, if you notice, all of the technical indicators are bullish. Okay, heavily bullish, overbought and saturated. Or in simple terms, the S&P 500 is 100% absolute bullish on the daily chart, as well as saturated and overbought. Okay, the same thing is here. Okay, in case of the Dow Jones, the Dow Jones is also, okay, 100% bullish, as well as saturated and overbought. Okay, all of the, so you can clearly see these the technical indicators. Okay, oversaturated and overbought in case of the S&P 500 and also in the Dow Jones. Okay, so this makes this the movement dicey. Okay, this particular movement, okay, or the movement that is about to come. So I'm going to discuss that the movement what we are anticipating, okay, in this the next week. Okay, but before that, let me tell you that if you are also looking for these daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market, minimum 5 to 10, okay, every week, then you can join my Patreon community. And in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And on my Patreon page, there are these the two tiers or the two levels. Okay, so this is the daily S&P 500 updates for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents. Okay, there is no other difference. And whenever you when you subscribe to either of these, then you will get the daily S&P 500 analysis, updates and probable movement from Monday through Friday, as well as the stock market opportunities minimum 5 to 10 every week. And if you notice that many people have joined my Patreon community for last many days, weeks, months, and more than a year, and they are getting these the daily updates, the daily analysis of the S&P 500 as well as stock market opportunities from Monday through Friday, each and everything. So whenever you want to join my Patreon community, you are welcome, and I've given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 and the entire US stock market in the coming week. Okay. So probable movement, okay, yes, events. Okay, next week the GDP data, the real GDP data is expected to be okay, it means it is going to be published. This time we are anticipating an extremely heavy, okay, figure or number that will be like 5.3%. Okay, something rare, very very rare. Okay, and last quarter it was 2% or 2 point, maybe 2.1%. Okay, I need to check, but this time more than 5%. Okay, exceptional. Okay, and that is why the Feds in their SEPs or the projections, they have mentioned that now for 3 years, 24, 25, 26, for 3 years the GDP will be on constant decline, and then in 2027 it will be back to the levels of 2023. It will take 3 years, okay, to cover this the cycle. Now GDP data will be published, and yes, and also the core PCE data will also be published. Core PCE data will also be published. But now there is a problem. The problem is that now we do not know that how the stock market is going to react, because whether the data comes positive or negative, okay, the stock market is considering that data as positive only. In November 1st press conference, Federal Reserve Chairman, okay, he went dovish. He has supported this extremely heavy bullish movement. Okay, then after a week he went hawkish. Then after 1 or 2 weeks again he went hawkish. Now in this the December 13th press conference again he went dovish. Okay, so now what it signals is that in his FOMC press conferences he will go dovish. Okay, and in his external conferences or in external events wherever he is going to speak, he will talk hawkish. And now the market is very well aware about this particular situation. This means that if there comes let's say, okay, in his upcoming, okay, press conference or where, okay, he is going to participate. Okay, I think after 1 or 2 weeks, okay, he's going to participate, okay, in another this the press conference. If he speaks hawkish, then this means that market will not consider his hawkish remarks or these, okay, these the comments. Okay, unless he specifically, okay, and he talks more about the recession. Okay, so that is the only and the only case where the stock market may consider, okay, his remarks. Now the movement, okay, in the next week, Monday, yes, Monday will decide what is expected to happen for the rest of the week. Okay, well, it is not that straightforward, but still let me give you an idea. If there comes a closing, if there comes a closing below this particular candle, the last candle, okay, that was formed on Friday, then that will be very very much clear that now more weakness will be there. If there comes a closing which is around the open price or the closing price of the candle, okay, but still the closing is below the high price of this candle, this also means some weakness is there. Okay, however, if there comes a closing above above this particular candle or above the closing price of this candle, okay, or above this entire candle itself, then it will be supporting the bullish movement. Okay, that the stock market want to go more bullish, although it is heavily, extremely heavily saturated, okay, and heavily overbought, extremely heavily overbought. All of these situations are there, but still, okay, this kind of situation is simply saying that yes, okay, that it want to go bullish, right? So on Monday closing, okay, this will be clear. To my Patreon community members, okay, I will give you the numbers. Okay, what will be the numbers, absolute numbers that will confirm whether it is going more bullish or bearish. But as of now, okay, what we know is that there is a wall. there is a very strong resistance zone. Okay, and S&P 500 has to put a lot of efforts. Okay, or if there comes comment, yes, recently there was on December 13th, the Federal Reserve Chairman, okay, he said that the Feds can go for the rate cuts even before reaching to the 2%. Okay, before reaching to the 2%, the Feds can go for the rate cuts. The next day, one of the, I think one of the regional Fed president, okay, or someone from the Fed has confirmed that Feds are not talking about any rate cuts. So what it means that if there comes more positive comments from the Federal Reserve Chairman, means more dovish comments from the Federal Reserve Chairman himself, or if the PCE data, core PCE data, okay, okay, it comes less than the previous data, okay, indicates that the inflation is coming down. And but this okay, this particular data, it must be good. Okay, or similar event, something that is exceptional. Okay, if that happens, then only this particular resistance zone, this particular wall, okay, it can be breached and a sustained movement can be seen. Okay, but as of now, remember, this case was there for the, okay, last week also. Okay, and particularly, okay, this was there in the Dow Jones. Okay, that any more addition, okay, even addition of one more point, okay, it will add more weight, it will make it more saturated, it will make it more unstable. Okay, and this thing, similarly, okay, the same thing is there. What it indicates that yes, it is bullish and it is holding, it is moving up, but now, yes, now there is one thing that I am very much sure. Whenever there will be a reversal, okay, then we will see one very heavy candle, a single candle, just one candle, red candle, and this one red candle will be able to engulf, okay, three or four previous candles. Okay, because historically we have seen that when it goes against and heavily saturated, moves up, then there will be just one red candle that will heavily engulf, okay, all of this, something like, yes, you can say something like this. Okay, this candle has engulfed previous four candles. Okay, or maybe, more, much more heavier than this. Okay, in this the current scenario, right? Okay, fine. Now the question is that if the S&P 500 continues to move up, okay, and if in case it is able to breach the wall, this the extremely heavy resistance, okay, in that case, where it will be heading to? In that case, okay, see, this is the previous movement. You can see that the all-time high was 4800 something, 4818, 4818, okay, some points. Okay, although I'm not saying that it will be able to move up and will be able to hit 4818. Okay, but the current conditions, okay, the heavily saturated and all, okay, I'm not confident that under these the current circumstances, okay, where everything is so heavy and so much saturated. Okay, and even if the S&P 500 wants to move up, then the Dow Jones is at the levels, okay, like last 6-7 years we have not seen. Okay, this means that unless the Dow Jones gives, okay, this kind of heavy movement, we are not anticipating, okay, any heavy movement or any good movement in the S&P 500. So the movement in the S&P 500 is, again, okay, it depends on that how the Dow Jones is going to move. And while the S&P 500 is saturated, overbought, and these, okay, the Dow Jones is heavily saturated and heavily overbought and heavily unstable. Okay, and that's the problem. Okay, so this means that if the Dow Jones, if it is start to show weakness, in that case the S&P 500 will not be able to move up to 4818. They will not be, okay, this is the new all-time high in the S&P 500. Rather, okay, in between these the levels, okay, we can see or we can expect some reversal. Yes, there is one more thing, that for the S&P 500 to move up, okay, and to move towards 4800, the Dow Jones must keep on, okay, or must be able to sustain, and it must be able to give, okay, these back to back, these are bullish and bullish movements. And if you have subscribed to my YouTube channel, or if you are my Patreon community member, okay, for last many months or years, then you know that The stochastic RSI. The stochastic RSI, as soon as the stochastic RSI, okay, it hits, as soon as the stochastic RSI, okay, it hits 0, then we can see a reversal. Okay, but recently we have seen that the S&P 500 and the Dow Jones, okay, they have hit 100. Okay, that is the point of reversal, but they have sustained, okay, at this the 100. Now the problem is that they have hit absolute K equal to D equal to 100. Okay, this is absolute saturation. Absolute saturation means generally whenever the K becomes 0, then comes a bullish reversal. Okay, whenever the K becomes 100, then comes a bearish reversal. But now K and D, both of the channels of the stochastic RSI are 100. Okay, in both of the cases, and also on the weekly chart. So this itself, okay, it is very unique. So yes, it says that there is absolute saturation, and the other point is that it also confirms that there are extremely heavy bullish sentiments, extremely heavy bullish sentiments. And FOMO, yes, FOMO is there, FOMO is there, a lot of FOMOing, a lot of FOMO. Okay, so people, they just want to buy, and everyone, okay, looks like that everyone is buying. Okay, so this is an exceptional situation. However, the market will not be able to sustain, okay, in this condition, K equal to D equal to 100 for long. Okay, let's see, okay, how it goes. There is one more thing, that if the S&P 500 wants to move up and want to cover this distance quickly, then the Dow Jones must give this the support, the quick support. Quick support means that the Dow Jones must give heavy bullish movement again. Okay, although saturated, although unstable, and these things, but it must give heavy bullish movement and must cover this distance, okay, within 2 to 3 days. Then only S&P 500 can move up and can cover this distance. But if the Dow Jones, okay, if it becomes reluctant, in that case S&P 500 won't be able to move up, or won't be able to cover this particular distance, okay, or this much of distance. A little bit okay, distance, fine. Now in case of the Dow Jones, the extremely heavy resistance, okay, it is still around, means it is already there at one of the heavy resistances. Then there is one more heavy resistance, okay, where if it moves up, then it will hit that resistance, that will be the final. Okay, in the S&P 500, the heavy resistance zone is already there. Okay, just okay, a little away from this, the current closing. Okay, so we are very much clear that until and unless the S&P 500 clears this zone, sustains above the zone, it is not going bullish. Okay, no matter what is happening in the stock market, it will not go bullish. That's it. But yes, if it keeps on struggling, okay, around the zone, okay, or at this the zone, then yes, definitely, okay, then it will become weak, okay, and it will be coming down. Okay, so this is something that we are very much clear. Okay, this is the bullish part. Okay, and on Monday, as you know that on Monday it will be clear whether it is going to move up, or it will be coming down. Now comes the bearish part. So bearish part, okay, is very okay, it is very much simple. The bearish part, okay, it says, as of now, any kind of bearish movement, okay, uh, short term fall, long term fall, heavy fall, light fall, okay, where it will be coming down to, it will be coming down to 452737. Okay, earlier there was many other these the levels, they were in the picture. Okay, but now it is 452737. Okay, if it keeps on coming down, giving reversal, okay, again and again, then at max it can come down to this particular level. Then then we will need, or so not, but then the market will be looking for a strong reason to breach this particular zone. Because if it gives up this particular zone, okay, then it will become more weak, and then it will come down. Okay, this particular, okay, this particular level, okay, it was there, then the 200-day EMA and all, okay, all of these things. However, with these the current bullish sentiments as of now, okay, we are not anticipating this much of fall. Okay, of this, but rather this the normal movement, because this much of fall from here, okay, this is how much, this is 3%, not 3%, but more than 3%, 3.5%. Okay, this much of fall, or 4% approximately. So yes, saturation overbought, and unstable. Okay, these conditions can give, okay, this kind of pullback. Okay, but because the FOMOing is so heavy, bullish sentiments are so heavy, so we are not anticipating this kind of 4% fall. 2%, 1%, 2% fall, okay, that may happen. Okay, but the point is that once there will be this the beginning of the reversal, okay, then it will not stop as such. Okay, then it will continue, whether it will be slow, okay, or will be rapid, okay, instant, then it will depend on, multiple factors. Now between the previous closing and the 452737, there are these other support zones, or these are my, these are support levels, okay, or these are moving averages, you can see. Okay, but in case of the Dow Jones, you can see that particular support zone, okay, is around here, uh, but it is still, far or from this level. 2%, 3%. Okay, so Dow Jones 3%, S&P 500 4%. I'm not sure with this kind of, extremely heavy bullish sentiments FOMOing, if this much will be possible in this the next week. Okay, but let's see. But what we know is that our levels, okay, the levels will work perfectly. Okay, because they have worked always perfectly, so they will work perfectly. Okay, but now you must remember that at most 452737 it can come down, the S&P 500. In the bullish side, okay, 4800 will come into the picture only and only if the Dow Jones gives that kind of bullish movement. But if the Dow Jones doesn't give, okay, that kind of bullish movement, in that case it will not be able to. Okay, and Monday will clear, or Monday will define a closing below this the previous candle, means weakness coming down. A closing above this the previous candle, okay, or this the candle that was formed on 14th, means it is going to move up. Upward movement is subjective to this the zone, extremely heavy zone. Only and only if it clears the zone it can move up, otherwise it will fail. Simple, very very simple. So if you also want to join my Patreon community in order to get the daily updates, the daily analysis of the S&P 500, then I've given the link in the description of the video. And now as we are anticipating a recession, okay, a slowdown in the economy, okay, so this is my program, 30% returns in 1 year, okay, with the assurance, okay, in the through these the terms and conditions, okay, and these are the sample calculations, okay, this is there. And also this is my S&P 500 knowledge transfer program. If you want to become self-reliant, if you want to learn by yourself, okay, then these are there. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit like if you have liked this video. And yes, if you have any questions that you want to ask, okay, then please feel free to ask your questions through the comment section. So guys, this was my S&P 500 weekly technical analysis for the next week, which is from December 18th, okay, that is Monday, to December 22nd, that will be Friday.